Good morning, everybody. Welcome. Get going in a couple minutes after everybody files in. Thank you for joining us this morning. Make sure you like and subscribe on X and YouTube. You'll be notified when we go live with content in the morning and throughout the day, as well as our posts on X. Good morning. Okay, I think we'll go ahead and get started. Thanks everybody for joining us this morning. This is Michael coming to you from Game Edge on Wednesday, January 7th with our pre-market prep session. As always, we'll start with our three pillars: sentiment, structure, and trend. Good morning, Bush. And then we'll cover some individual equities. I had extensive posts yesterday. The team was extensively posting individual equities yesterday. Some trading setups that we were taking this past move up when the market trend model was indicating. And then we have individual equity scans within our Discord, and that's all covered in our Game Edge Fast Pass, as well as our blog posts, our education. So you can check those posts out on X if you're an individual equities trader, but we also obviously cover SPX option structure. So let's go ahead and jump right into it. Our market trend model, we continue to see extensive buying in the overall market. Just a quick orientation, the bolded white line is the cumulative tick or intraday instantaneous cumulative tick. This is just indicating buying versus selling in the overall market. Obviously, we call this or refer to this as a linear up pattern in the buying. It's just a 45-degree angle to the upside, almost a 90-degree angle, really. So that's just extensive buying within the overall market. And we're above the colored ribbon. So this is our mechanical portfolio gate or trigger. So our mechanical portfolios have turned on yesterday when we crossed above the colored ribbon, or previous day, and then entered positions yesterday also on the P-Trans to PGX mechanical strategy, as well as our wheel strategy. And we'll be closing two of those positions today, Amazon and Capital One Financial, for nice gains. Amazon had an extensive move to the upside yesterday, obviously. And we were already holding positions in our mechanical portfolio from previous triggers, and then we just added those positions yesterday. So again, takeaway is extensive buying within the overall market to the upside. You'll want to see this cumulative tick continue to expand to the upside. We are reaching a point where we may see some sort of stalling. We'll talk about that here in a few minutes on the other market trend model. So this is our trading view market trend model. We've had this running now for approximately a couple weeks, getting really good feedback from members about the sensitivity of this, as well as the indications for when we need to move into the market and put capital at risk, and then when we need to start to be cautionary. So previous sessions here, you can see that we're under these moving averages that we place on here for momentum. So obviously, if you're under these moving averages, most likely the market is in consolidation or weakness mode and moving to the downside, which we were seeing in the SPX. And then we started to recover. We crossed back above these moving averages. You see the market trend model turns back to green, indicating buying in the overall market. And then when we cross above those moving averages, that's a trigger for us and to start getting in motion. That was January 2nd, the 5th here when we started getting in motion, and then continued for the 6th and the 7th. So we've had a 3-day run up here within the overall market trend model. So if you're able to capture these upside moves within the market trend model, obviously you had a significant gains, and you want to make sure you protect that capital. Now, as usually into the 3 to 5 day period, we start to see some sort of consolidation or pullback. This could run up for 5 to 7 days, but that's historically from our back testing where you start seeing some just some consolidation and possible profit taking. So we'll watch that for today as we enter into roughly day 3 3 to 4-ish on the move up in the overall market. So again, you can join our Discord. All of the code is in there for this this market trend model, and you can just place it on your trading view chart very quickly. All right, let's move on the SPX options complex. We separate the SPXA from the SPXP. The SPXA is our cruise ships. These are institutions. These are monthly expiries, larger market participants and positioning. You'll notice that 68.80, we really pounded that into the ground yesterday, that we need to stay above that transition area for an opportunity for price appreciation to the upside. And we were seeing call dominated, which is out of the money call speculation to the upside, as well as in the money calls below us that will continue to be supportive on any pullback. And then 7,000 continues to be that high sensitivity area to the upside that we look for the market that's most likely the path that is going to traverse to the upside. And then above 7,000, we do have speculation all the way up, actually towards 7,200 now. So we see market participants rolling up and out further out in time. Again, that's not going to be a straight path, and it's not going to be tomorrow. So again, that 7,200 obviously is just further out on expiries that we're watching market participants keep speculating to the upside. So key takeaway, call dominated, supportive on pullbacks, and then we have speculation to the upside via institutions into the monthly expiry and beyond for January. All right, moving on the SPXP. These are our speedboats. Obviously, the daily or weekly expiries, and then you can add to this depending on what your overall trading time frame is. And we have this nice sliding scale down there that is interactive. So you can click on the top 25% of expiries. This basically covers 76% of the total OI. So this gives you the highest weighted expiries coming up. Obviously, today is one of those expiries. So you can look through the overall options expiry complex and see, when you want to plan for your trading plan into those expiries. But quick takeaway is we're call dominated above below spot price. Transition area continues to be 6,930 to 6,900 on the SPXP, and then to the upside we see 7,000. Again, that continue to see that speculation further up the strikes, and that's PGX and COI. So that'd be an area where we'd most likely see some stalling first as we traverse the overall options complex. We need to get above 6,950 today. We'll talk about that on 0 DTE to have a path up towards 7,000. But you do see all these out of the money calls above us. Again, the charm will continue to increase on those, so that continues to be a headwind unless we see out of the money speculation override that, or we see a drop in volatility, which we're already seeing, but we see a little bit more drop in volatility, which will give us a vanity tailwind also to drive us up towards that 7,000 strike price. All right, moving on the SPXP delta balance. Again, we separate the structure from right-hand plane and left-hand plane. So your right-hand plane is your above spot price. That's your out of the money call speculation, as well as in the money puts. And that is denoted by the green dotted line. And then your left-hand plane is your in the money calls below spot price, which we've already discussed, and as well as out of the money put hedging. So heading into today, we are seeing the green dotted line continue to the upside. That's that out of the money speculation I talked about is alive and well, positive slope. And we'd see the left-hand plane dropping a little bit, but again, nothing to really worry about. Those are your in the money calls below us, as well as out of the money put hedging. This also could be some put hedging coming in. This is opportunistic people or people protecting their long positions with some out of the money put hedging if we get an overall pullback in the market again. And you'll see that cycle continue where we reach up on pushes in the overall SPX. We'll reach a point where we see some monetization in those calls. You'll see this drop back down. You'll see out of the money put hedging come in. Those are just opportunistic speculators coming up under price for a slight pullback in the overall market, and then those will get monetized, and then the in money calls take over and be supportive, and then we just continue this cycle over and over until we see a regime or sentiment or structure change. Delta balance is the blue line. Again, that's the aggregate of both. That's railed at 1. So bulls are in full control of the overall market and overall structure. We do see slight weakness into next week, roughly into the middle of the next week. That's your left-hand plane. So that's out of the money put hedging, in the money calls expiring. But again, that out of the money call speculation in the right-hand plane is just continuing to explode to the upside. So nothing really to worry about here. We'll watch this. Obviously, I hear that there's some news on Friday with some tariff decisions. But as of now, we're not seeing any speculation into Friday from market participants or really any fear at this time. All right, moving on to the XPXP GEX ratio. I covered this yesterday that I wanted to observe a positive slope if SPX was going to rise. Yesterday, we had a flat slope. flat slope into the 6th, and now we're into the 7th, and we saw that resultant move up in the GEX ratio. So this is like a put call ratio, but we add a time component, which is gamma. So short dated call gamma versus short dated put gamma is weighted more significantly. So if your short dated call speculation is coming in, that causes a rise in the GEX ratio. If a put speculation is coming in, that causes a drop, obviously. But when we see the SPXP moving to the upside, we want to see market participants continue to speculate to the upside. That will be confluent with price and structure and continue to help support price as we move to the upside, which we saw yesterday. So we're not seeing a divergence in that at all. So again, speculators alive and well and continuing to speculate to the upside. And if the tail wags the dog, then we'll continue to see spot price appreciate also. All right, moving on to the SPXP 0DT for today. Call dominated above and below spot price. Again, I talked about that in the X post that we saw significant out of the money speculation to the upside, which we're seeing in the net deltas. But then again, we also see the resultant charm of those out of the money calls as they continue to decay throughout the day. So again, getting above 69.85 will probably be really difficult today. And then we're just going to march up this hill of charm that will continue to grow throughout the day if we're below these strike prices. So 69.50 again, would that be that first price that we need to overcome? And then 69.60, I talked about that in the X post. As I said, if we're below these charm bars will just continue to grow throughout the day, and that will be a headwind. Our tailwind would be a Vanna tailwind if we see a drop in volatility and we see resultant out of the money calls going to the complex. We see that or observe that via our vol-m command. We've talked about that extensively, and we continue to post those off and on. But again, that helps us understand if we're seeing the market participants speculating to the upside or speculating to the downside. We've actually added a couple other charts that we'll be rolling out pretty soon. It gives us a little bit more granularity about what is happening intraday from market participants. So again, drunken sailor range, 69.10, 69.50. If we're in that, we'll most likely see some choppiness. Pullbacks to transition should be supportive. 69.20 to the downside would be an area I'd look for supportive type action. If we get down there, confluence of GEX and DEX transition. I talked about the offset misalignment of the GEX and DEX. We do see that many times when we have a significant move to the upside. So we need to see those strikes continue to fill in by market participants. So that would contract the GEX or expand the contract the DEX transition or expand the GEX transition. We do like that the GEX transition is only 5 wide, so that's unambiguous at 69.20 to 25 also. If we get below that, again, we'll continue to be supportive all the way down to 6,900. We've tapped on that 6,900 multiple times. Yesterday was a nice pullback area that we talked about, 6,900, 6,905 to get involved on the long side. We had that move up, pull back early on in the market, helped us get involved in the long side, and then had that move up towards the 69.50 level. So we'll be looking for the same kind of thesis today, 69.50. If we fail there, pull back into the transition area, most likely have an opportunity to get long, and then possible move up towards 69.50 again, and then possibly above, depending on what market participants are doing with speculation. So again, thanks for joining us, gameedge.us. Go to the newsletter section, put in your email, and you'll be delivered Beyond the Bell newsletter. Again, go to our free courses, Game Edge Fast Pass. This is all free. This goes through our tools, methodology. Down here, there's a couple other free courses that you can sign up for. And then our blog has extensive education posts. You can read those at your leisure. And then obviously you can click on the pricing tab and come join us in our Discord. And you have 14-day free trial, all the tools turned on. Great trading community of traders of all extensive backgrounds and time frames that they've been trading. So come join us there. And with that, if anybody has any other individual equities, I'd be happy to cover those this morning. I know a couple of stocks on our scans this morning that we were looking at are AAOI, CLS, Iron, Carvana. Seen those have done really well the past few days. Let me see what else we're looking at. DG had an extensive move to the upside, provided great opportunity yesterday. Obviously, Amazon, and already went over Iron. So some other stocks we're looking at, AOI, APO, and CLS for today. So you can check those out to see if those fit into any of your trading plans. TE, I'm not sure what TE is. I'm not sure. Yeah, TE we do not have. That's not, probably the OI is not high enough for TE. SOXL, I think the OI on Soxel, so we're okay on Soxel, yeah. So Friday's expiry, call dominated. I know the semis have been moving up, doing really well. You're right at the transition level for Friday. 55 to the upside looks good. You're call dominated. Let's look at the top 25%. Again, looks good here. Transition area 52.50 to 53, and then 55 to the upside is probably going to be the cap on price through the next few expiries there. MU's continues to look great. Call dominated. Let's see here. Oops. So call dominated. Let me click the top 25 expiries here. So call dominated to the upside 350 looks like PGX, 337.50 to the downside, transition area there. Do that. Click the next expiry. We actually see the structure move down a little bit for the 116 expiry, down towards 330. Let me look at 123. So then it ramps back up to 350. So 350 to the upside looks like that high sensitivity level speculation area that I would be looking for price to move up there. So 335 towards 350, call dominated. Any pullback should be supportive too. So looks good there. Hood. So 121 spot price. We're above transition. Nice supportive area at 120 on any pullback. 125 to the upside looks good. 125 there, supportive there. Let's look at the quartiles. Looks good. 125 looks good to the upside, and any pullback should be supportive. So I have no problem getting in Hood. Meta started moving up yesterday. I think it triggered on a couple of our scans. So a ton of out of the money speculation to the upside. 675 looks good on Meta. I like the look of Meta, at least to that. Let me look next. Actually, structure moves up to 700. You do see some stalling probably into the 662, 665 overhead, and transition widens a little bit. So a little bit of uncertainty there. Still call dominated though. Let's look at the quartile. Looks good for 700 on Meta. Yeah, transition area. I'd like to get above transition area and then possible move up towards 700, but everything looks good on Meta. So keep that one on my watch list. HON. Yeah, Butch, no problem. HON, let's look at the nearest expiry. 202.50. Okay, so OI is very low on Honeywell, 1800. So I would take this with a grain of salt. Dealer metrics do not necessarily apply. Hedging metrics do not necessarily apply to this. So 116, we only have 27,000 OI. So I don't know if you've enjoyed this before, but if you compare that to what we were seeing in like Meta, you have hundreds of thousands of OI. So you have 1.8 million OI here, 145,000, next expiry, 600,000. So again, the structure is on Honeywell is a low OI. So I would not put a significant extensive analysis into the overall structure on Honeywell. That said, it is call dominated. We do see market participants speculating to the upside towards 210. So that's where I'd be watching on Honeywell. So hopefully that helps. All right, let's look at the trading view chart real quick before we jump off. See where SPX is trading this morning. So SPX pre-market here, we're right below that 69.50 level. You see 0DT transition, DEX transition, as well as GEX transition on 0DT. And these are full expiries. AMD, yeah, I'll look at that one. AMD, this is the full expiry script that we have in our Discord that you can overlay. So 69.45, 69.50 going to be key level. I think we'll continue to look at that and watch that. AMD, I think AMD had a large pullback yesterday, didn't it? I can't remember. So we'll look at, So 212.50, let's look at the next expiry. So 212.50, we are call dominated, but these are a lot of short calls overhead. And then 230 is the upside speculation. We're at the bottom of transition. So we're at an inflection point here. If we get below that, we could definitely bring in some more negative deltas to the downside. Let's see the next expiry here. Next expiry. So you actually see PGEX or NGEX above PGEX. So that means the structure flips, even though we're call dominated. So we're supported below, but not necessarily conducive of a large move to the upside on AMD at the moment. 220 to the upside would probably be where the cap on price is. Let me look at the quartile. So 220, yeah. So you see PGX at 220. Tons of calls below us though. So those will continue to be supportive on any pullback. So that looks fine. but the upside speculation is not great at the moment on AMD. So 220 would be where I'm looking, and then 227.50 is a COTMC for our proprietary level. So that's where out of the money calls go in the money, and historically you see some monetization into that level. So. All right, thanks everybody for joining us. GameEdge.us. Check us out as always. Like and subscribe on X and YouTube. Be notified when we go live, and as well as we post individual equities. Everybody make it a great day and manage risk as always. Thanks.